Hello, everybody.
Hello.
Okay, we've got quite a lot of people on today's webinar, which is a good sign. Let's just do a quick tech check before we get started. If people can locate, you can locate your chat button and just let us know if you can hear us. Just type in a loud and clear or
Yo.
yes or you go girl or something like that. Oh, good. Yes, excellent.
Cool.
Great.
Cool.
Fantastic. Hi, Kat. We were wondering if that was you. Yes. Fantastic. Oh, we might get a visit from my cat in a minute. Anyway, the joys of streaming from home. So, all right, great. All right. Well, it sounds like everybody can hear us and see us. So let's get started. The last time we met, or the last time we did this webinar, we did a pretty much an overall of the government stimulus as it stood at that time. And in particular, we focused on the 250,000 that the loan that's going to be 50% backed by the government / taxpayer. And we also talked about the employer cash flow boost. If anybody missed that webinar and would like to see it, because that was a pretty good one. We got some good feedback from that.
Great feedback.
Great feedback, yeah, even.
I just talked the whole time.
Yeah, you did just talk the whole time, and I feel you're going to do the same thing here today.
Right in my wheelhouse.
Yeah, right in your wheelhouse. There's numbers involved. There's dollar signs. So
tax law.
Yeah, tax law. Mick's a happy person. Have you had a spreadsheet for this yet?
No.
Oh, not yet. Okay, it's coming. I am quite sure it is. But look, if anybody would like a copy of the previous webinar, we went into a fair bit of detail and kept it quite practical. Just email me at cforcat.hendry@hendry.com.au. So yeah, just shoot me an email and I will get a copy of that video to you. All right, the screen's small. Thank you very much for that, Damien. What I'm going to do is close. I'm going to stop showing my screen. Look at us.
There we are.
Hey, oh, maybe we should have kept it small, Mick. Okay. All right. Thank you very much for that. Appreciate that. All right. Look, one of the things that I probably want to point out before I let Mick take over for the rest of the time is just to touch on the situation with the banks at the moment. So I know certainly a lot of our clients have been applying for the 250,000 loan order up to $250,000. And we've been getting a lot of queries around why it's taking so long. And I guess here's the thing. No bank in the world was set up for this specific circumstance because no one could have anticipated what was going to happen with this whole coronavirus. So whilst it was great that the government announced it and are doing it, the bank had to put in place the structures to be able to cope with it. Yeah, the whole process. I think Bank of Melbourne were pretty much first on it, weren't they?
Yep, NAB's still working on it. CBA is pretty good. Westpac, not sure, but certainly Bank of Melbourne were first online. So yeah, they're getting there.
Yeah. So our advice around that is, first of all, just don't expect to be easy and you won't be disappointed. It is going to take some time. The other thing that we're suggesting too is if you have a relationship with a bank manager, a business bank manager, maybe get in touch with them just to make sure that if you've applied online, that it has gone through, get an idea when you can expect to be contacted. So, all right.
My turn.
It is your turn. So you can give us a bit of an update. And also we did have quite a lot of queries last time around the employer cash flow boost. And that seems to be the area that is causing most people the confusion at the moment.
And the JobKeeper.
Well, yes. Yeah, of course, a JobKeeper. But that's a new thing. I'm saying that we're going to revisit that one as well because we've had a lot of feedback about it causing a little bit of confusion. So we'll go over that again. But yes, we'll definitely talk about JobKeeper as well. I think we'd be lynched if we didn't talk about that today.
today, definitely. Yeah.
All right, and your turn to shine now, Mick. Go for it.
So let's get into it. So thanks for the feedback a fortnight ago about the employer boost. That's pretty much what we covered, as well as the other key areas like lending and relaxing of the bankruptcy laws. Today I want to go into JobKeeper with a bit more detail. I do have a video on our Facebook page if people want to look at that. But let's get into JobKeeper. It's very topical, and it's even more topical as they attempt to pass the legislation tonight. I believe, Labor are a little bit opposed to it. There's some elements that are a bit unfair and tricky, but we'll touch on that today. So ask any questions. Hopefully I'll get to them. If they're specific, we'll try and answer them perhaps offline.
Yeah.
So what's the JobKeeper? It's another temporary measure.
Oh, Mick, just can you project your voice a little bit more?
Sure.
Apparently I'm a little louder than you.
All right. So I'll get that last time too. So what is the JobKeeper payment? It's a temporary measure to help employers get over the coronavirus. Eligible, and we all know this, but I need to cover it. It's a generic advice anyway, but it's essentially a $1,500 payment per fortnight per employee that qualifies, up to 6 months starting the 30th of March. It's to help employers retain staff over the coronavirus period. Now, you notice most of the stimulus packages are 6 months in length, because I believe, they basically assume that's how long it's going to take to get over the effects of the coronavirus. So to qualify, there's a couple of things that must happen. From the employer's perspective, if your turnover is less than $1 billion, and that's our clients, then your turnover...
What about that? No, you're joking.
No, we don't have one. Your turnover's got to drop by at least 30%. Now, I know the raging question at the moment, I'm getting it at least 3 times a day. What is 30%? The 30% is an unknown measure period at the moment, but the latest indication is it's over a similar BAS period. So what that means is if your BAS period last March, and let's say you lodge quarterly, you turned over $300,000 in the March 2019 quarter, then you're going to have to have dropped at least to $210,000 in the March 2020 quarter. And I hope my maths are right on the spot. I think they are. Yes. So that is a 30% drop. So you will qualify for the JobKeeper. Now, if you're monthly, it's a bit simpler, meaning that, you can compare last month, meaning 2019 to March 2020, for example. So that's how you qualify. Now, as I said, it's unknown as to how it's specifically going to be measured, but after tonight, assuming it gets passed, then we'll be a lot clearer on that measurement.
Get a little bit more detail.
Yeah, as I keep saying to people, visit our Facebook page. Maybe I'll drop some more videos. You can see my ugly mug there, and I will explain what the 30% measurement is in more detail when we got our head around it.
Yeah, with more. Well, when I think they get their head around it as well.
Yeah.
And I think, again, coming back to what I was saying about the banks, these are uncharted waters. So we can't. I know that there's a lot of people getting very frustrated, and we're amongst them every now and then. But it is going to take time, and we're not always going to have all the details straight away. The government's going to let us know what's coming, but they're going to often drip out detail a little bit later.
Yeah, well, they announce it and then they make policy on the run. And I must confess, I'm not a big fan of that. But in this case, with the coronavirus, with the crisis, it's been very effective in creating some confidence around business activity.
Yeah, I feel they had to do that.
So the 30% is the only sticking point really at this point. So stay tuned. And I know that doesn't answer a lot of questions, but we need to wait for the legislation. Now, where a business has not been in operation a year earlier, or their turnover a year prior may not be representative of the average turnover, the ATO or the Tax Commissioner does have discretion to consider additional information that would demonstrate why a business has been affected by the coronavirus. So there is some ability to, apply for that discretion. But like a lot of discretion, I wouldn't hang your hat on it because it's last resort, so to speak.
So it's really around, well, obviously, if your business wasn't around 12 months ago, but also if you can prove that it's materially different than it was
Or
12
even-
months ago. And we've got a few clients where I think they've got a reasonable case.
Or even last 12 months ago might have been artificially low for a reason, and therefore when you compare this March 2020 to last March, then you will have to justify why last period was low. So there's all these little particulars that need to be ironed out as we move through the JobKeeper. So it's essentially on revenue, that measurement of 30%. So then we go to the employees. So you basically need to turn over less than $1 billion and drop by 30%, right? Pretty easy for most, as long as you measure the 30% correctly. Then we go to the employees. What is the criteria for an eligible employee to receive it? And this is where I think it gets a little bit murky. If you were employed or were stood down after the 1st of March as a full-time or part-time employee, then you qualify for the $1,500 as long as your employer registers, right? So what that means is full-time, part-times automatically qualify if the business can show the revenue drop. Casual staff, that's a different story. They have to have been employed for at least 12 months on the 1st of March. And as another side, you must be at least 16 years of age and be an Australian citizen or a holder of a permanent visa, and there's a bunch of them which I won't go into today. But essentially, casual, more than a year from the 1st of March, but part-time and full-time will qualify. And you also cannot get JobKeeper from more than one employer, obviously, otherwise it's double dipping.
So if you've got a team member who has another job, it's one or the other that they get their JobKeeper from, not. Not
so that's essentially how it runs. It's a month-by-month proposition, meaning that you may not qualify in March, but you may qualify in April because, for example, the coronavirus took effect later for you for some reason.
So that answers Damien's second question there, doesn't it?
Yeah. So it does. You have to prove to the ATO on an ongoing monthly basis by submitting to the ATO your 30% drop in revenue. And again, this is why I say the 30% is hard to measure, because if they do go with a BAS period, meaning you measure this March, or let's say this June quarter to the previous June quarter because you're on a quarterly lodger, you may or may not have to prove that monthly because you're a quarterly lodger. So it's hard to prove monthly from one month to the next, in theory, if they're going on a BAS period. So it's all this technicality and all this detail that will be ironed out, presumably by our industry experts as well as the tax office after it gets passed. And as you'd imagine, the maternity one, that's a tricky one. I think we need to discuss that offline. That's very detailed.
Sorry, that was a question from Damien. Thank you for that. So I assume you're coming to Damien's first question there as well about including employers.
Includes every employer as long as you drop by 30%.
But I think what Damien's asking, and correct me if I'm wrong here, is as an employer, do you get the $1,500?
If you're on the payroll, definitely. Yeah, you're part of the payroll, definitely. So you qualify for the pay.
But you can't suddenly put yourself on the payroll. No. You had to have already been on the payroll.
Been on it, and there are also other anti-avoidance provisions. I think that's one of the really hot topics us accountants, and I'll put myself into the other thousands of accountants around Australia that are asking questions when we talk about JobKeeper and the employer boost. So you obviously cannot receive JobKeeper and JobSeeker. So if your employee receives JobKeeper from you, then they obviously have to stop getting JobSeeker, and it is a couple $100 a week more.
Which one's more?
The JobKeeper.
Okay, cool.
So how do employers register? I'm probably going to cover over this quickly because I think a lot would be aware of this one. You basically go online under the JobKeeper page, put in a few details, ABN name, contact details, email address, and you're registered, right? Then you're going to have to prove the 30% as we move through the months coming ahead to show that you have dropped by 30%. As you may be aware, it is paid in arrears and it starts the first week of May. So that's important to to realise that it is in arrears and you are going to have to fund the first month or so. Now, this is critical for those on the webinar, and I hope the people that aren't on that have registered just to receive the recording realise this, is that you have to have at least paid in the test period. I can't think of the technical name, but you have to have at least paid the $1,500 between the 30th of March and the 12th of April, and that is Sunday. Is my dates right? Yeah.
What day of April? Sorry, I went somewhere else in my head there.
Yeah.
I was thinking about how I'm going to spend that $1,500.
So to qualify, you basically have to have paid every eligible employee that you think is eligible for the JobKeeper, and you have to then assume you're going to pass. You have to have paid it by the 12th of April, at least the first fortnight's payment, and then you will be reimbursed once the legislation passed and once you qualify at the end of May. Now, the obvious question there is, what if I don't pass and I've paid $1,500 on the hope that to your employees, on the hope that you'll be reimbursed? That is the danger with the system.
That's the devil in the detail, isn't it?
Devil in the detail, and I cannot emphasise that enough. So when we talk about the ability to measure the 30%, and we're not quite sure, we're hoping by tomorrow, which is the last day before Easter, we'll have some clarification. So as you can see, the timeline is very tight. For those that have clearly dropped by 30%, well, not a problem. But those that are tight, maybe had a slight increase, maybe not quite 30% over a month, but over a quarter they might, and maybe just may not qualify for March. You just may not pay the JobKeeper, right? So there's a cash flow challenge. Paying the JobKeeper and then hoping to be reimbursed. If you're tight on the 30%, meaning you may or may not qualify, then you might consider just missing March until we have some detail. Now, your employees or even yourself might go, well, you know, that's not in my best interest, but imagine paying 10 people, and I had the conversation today with a client, 10 people at $1,500, which is $15,000, cash flow's tight, and you do not get reimbursed for $15,000, there's a big problem.
I wonder, and this is maybe something we need to check with our HR expert. I think she might be on the call today, Sheena. And by the way, I don't know if we mentioned this last time, but this is a time when you need to have your HR expert, needs to be your best friend, because there are so many rules about different rules about team that are quite unique to these circumstances. But might have to ask her about whether there's you can come to maybe an agreement with your team that if it doesn't get reimbursed, that it comes out of their pay. I don't know. Anyway, Sheena, we'll be asking you that one. And by the way, if you don't have somebody, please, again, let me know, c.hendry@hendry.com.au, and I will put you in touch with Sheena. She is the bomb.
Yeah, good one. Right, now I want to answer a question that's popped up from John. What about casuals who've been employed for 2 years but took 6 months off last year? Do they qualify? That's the first part of the question. I would say no, because although they've 2 years, they haven't been employed continuously for 12 months. If you go by your words, took off 6 months. That would not mean continuous employment for 12 months as a casual.
That said, so I'm going with my knowledge of the law, and it's the idea is it being reasonable. I think that casual would have a case to at least apply for a bit of a dispensation on that, because that's quite a long term. So I think it would be worth that casual applying.
And then you've also got the second question, casuals that don't qualify, can they continue on the normal as payroll? Yes, they can. And I think that's probably the safety bet based on what we've just discussed. If you think you're lying ball about being reimbursed, I would say they don't qualify and just pay them their normal rate if they are working, so that they don't, you don't pay them $1,500 per fortnight. And then, basically you're stuck carrying the can because you didn't qualify, yet you paid them $1,500. So just because they're on the payroll doesn't mean you have to basically assume everyone gets the JobKeeper. Some will qualify, some won't. So you, as the employer, need to make a judgment call on that. There is also a discussion point out there that some employers may not register because it is optional. It is optional for employers to register for this. So some employers are perhaps not registering because it is potentially too hard. And as someone's quoted to me, I don't get anything out of this. And to some degree, that is true. You are doing this to keep people employed, to keep your key staff, and to obviously ensure that your business runs as normal.
Which I would think is actually a pretty big thing.
So it is a big thing, but it depends on the, let's say, the owner's mindset around that. It's one of those things that that you need to be considered.
What about a partnership in business with no employees?
I don't believe so, because you are not an employee.
Yeah, that's what I would have thought as well. But
no, you're employed with no employees. You are not an employee of yourself as a partner. Yeah. Generally speaking.
So, yeah, sorry, Shane, but I think that's probably going to be a no.
Yeah. There is a question, Steve. Can a director shareholder claim JobKeeper if they have received dividends? I'll wait till the end to answer that, but essentially no, unless you can prove you have received wages as well, because they are two distinct different payments. Payments for a director is a deduction, meaning a director fee or a wage. A dividend payment is an after-tax payment of appropriation of profits, for a technical term. So it is not a wage.
When you talk like that.
It is not a wage or a wage that would form part of JobKeeper. But I do want to probably cover that at the end, because that's important about what people are trying to do to get the $1,500 per fortnight, as well as what they're trying to do to get the boost, which is up to $20,000 to $100,000 of PAYG credited to their BAS account. You don't have to pay super on the JobKeeper reimbursement. If you pay normal wages like normal, then you have to pay super as it is normal. But the JobKeeper payment, if you pay, it is optional, for the employer to pay super on top of that.
Yeah. So completely at your discretion as to whether you want to add the superannuation. So that was Damien's question as well.
Yep. So that's an overview of the JobKeeper. It's watch this space.
Yeah.
Tomorrow's going to be a big day.
Might be a big video.
Could be a big video, could be a lot of phone calls, could be a lot of emails, but we'll hope to I will get information out to people tomorrow.
Assuming we have more information too, because if they're debating it in Parliament, who knows whether they're going to come to a consensus tonight.
But in summary, I would argue if you're paying yourself, and you've been paying yourself anyway, pay the $1,500 between the 30th of March and the 12th of April, which is the test period. So you at least have paid $1,500 to cover the fortnightly payment to be reimbursed. If you're doubtful, meaning you're not sure about the 30% drop, or you're not sure that potentially an employee would be covered, as an employer, you have the right to choose whether to participate in the JobKeeper program, and even potentially what employees may or may not be covered. So, as I said before, you don't want to pay, in my example, $15,000, 10 employees at $1,500 to find out you do not qualify because you don't pass the 30% drop in revenue test. So it's trying times, it's testing times, and it's certainly a bit uncertain, even though it's a good initiative. And some employees may even make money from this, just simply because they were not getting $750 per week prior to the JobKeeper. And essentially the JobKeeper is a throughput, meaning, if they qualify and they're on $500 prior to JobKeeper and you get reimbursed, then I think, they're now getting $750. So, yeah.
Now, I'm not sure if I can grab this one back again. There's quite a long one here from Mitchell, if you want to have a look at that. And I'm going to answer, Damien had a really important question that he wanted me to let him know on this one, and that is, where has the clock gone from behind the wall here? Because obviously there's an empty hook there. Well, actually, Mick and I at the moment are down at our little beach shack at Phillip Island.
Told you not to say that.
My parents live next door, so come down to help them out a little bit. And right now, I don't know if you can hear in the background, there's somebody moving gravel because my parents are building in the backyard the world's biggest vegetable patch. So look, if worse does come to worse, guys, we can all come here, and I'm going to start a commune. So
And I'm leaving.
yeah, and there was a shell thing from there, not a clock. So I need to get a bookcase in.
Yeah. All right. So we're pushed for a bit of time because I do want to cover the $100,000, which is basically a no-brainer if you can get it and won't have to be repaid. Mitchell, sorry, I can't read the rest of the detail. I don't want to get it wrong. Perhaps if you can email, if you were listening to earlier, c.hendry, H-E-N-D-R-E, @hendry, HENDRE.com.au. I will attend to that one, or even give you a call to see what you can do around this, because it's come off screen and I can't come to it and understand.
It's sorry about that.
It's just a long message.
Yeah, but if you shoot me through an email, we've got your back.
Yeah. And the JobKeeper is a month-by-month proposition. And as I said, if you're a quarterly BAS lodger and they measure it on that, that is going to be difficult to work through as we get the legislation. But you know, you may fail for March, you may pass April, you may fail for May, and you might pass the rest. So it's really a month-by-month proposition. You need to prove to the ATO, and they'll be using your single touch payroll data to pre-populate this to reimburse you. So, you know, that's one of the good things about single touch payroll to some degree. They do have some of the information, and we'll be able to Big Brother watching.
Yeah.
So the second part of today's webinar, so sorry about that, Mitchell.
Gordana.
Yeah.
So. All right. We'll c.hendry@hendry.com.au.
Cool. All right. So the 100,000 government assistance boosting cash flow for employers. Now, the last webinar was 50% and up to 50,000 that we did 2 weeks ago.
I thought it was the 100,000 by that.
Maybe
I think it was. I know things.
It's
all a blur. But I think by the webinar we were at 100,000 and 100.
So it is basically the amount withheld on your employee's wages, and it is essentially you do your BAS and they'll give you a credit for your PAYG withholding, which is tax withheld on your employee's wages, up to 50,000. So that's basically from the March to June period, you'll get a credit of $50,000. Now, from the July to September period, you'll get an equal credit over 4 instalments if you're more than 20,000. So if you qualify for 50,000, for example, because you employ a number of people from the March to June period, then you'll get 50,000 from the July to October period, which is 12,500 per quarter credited every single month because you are lodging monthly. If you're a quarterly lodger, you'll basically get the March quarter as a credit, and you'll also get the June quarter a credit, again up to $50,000. So what that means is whatever your withholding is basically what you do not pay on your BAS. You will get a credit against whatever the liability is for the withholding. Now, if your GST is less than the credit, well, then you will get a cash refund. If it's less than, basically, if you've still got a net GST to pay, then you still have to pay that, or it gets added to your tax office account. So that's essentially how the system works. Whatever you get as a credit in the June period, March to June, is the same number credit you'll get from July to October period. It's a different scenario for the $20,000, which is basically if you employ in the March quarter, because you're probably a quarterly lodger, you'll get, and you didn't have to withhold, for example, because your employees were below the tax-free threshold, you will still get the $10,000, and then you'll get the additional $10,000 in the June quarter when you lodge that BAS. So you'll get the $20,000 if you're an employer and paid some wages in the March quarter.
So that 20,000 you're talking about, that's where they don't qualify for the 50 grand one, where also $100,000 one.
Yeah, that's
because they're
based on withholding.
Yeah, they're not. Yeah.
Basically, incentivizing anyone who was an employer just with a minimum of $20,000, as long as you can prove you're an employer before the 12th of March. Now, we've had fielded a lot of calls that all of a sudden people want to register as an employer to get $10,000.
Which I completely understand. But I mean, why wouldn't you look to every way at them? I mean, it's survival at the moment, so why wouldn't you try and do that?
Yeah.
But
like the JobKeeper, there's some anti-avoidance provisions, which I'll probably look at my trusty iPad in a second to work through, because it's very important that people understand the implications of what they do on their BAS to try and get some of this, because it is obviously it's imperative you look at your cash flow, and that's what we're advocating to clients, and try and maximize any incentives that are available to you. And we're advising clients exactly the same thing, but at some point it might overstep the mark, and moving into a let's call it a scheme or arrangement to benefit yourself. And
the tax office has said they're going to act swiftly and severely.
Swiftly and severely. Now, tax agents are not agents of the ATO, but we're expected to obviously follow the law, and we are covered by this law. So essentially, the ATO provided guidance yesterday in conjunction with the Taxation Practitioners Board, who register tax agents. So basically, said that there's an integrity rule, and you'll be eligible for the cash flow boost as long as you or your representative, i.e. us as tax agents, have not entered into a scheme for the dominant purpose of becoming entitled to a cash flow boost where you would otherwise not be entitled, or increasing the amount of cash flow boost. This may include restructuring your business in a way that you usually pay your workers to fall within the eligible criteria, as well as increasing wages in a particular month to maximise the cash flow boost. So any sudden changes or characterization of payment changes may cause the tax office to investigate whether they are in fact wages, if wages have in fact been paid, and the correct characterisation of past payments.
So red flag.
So, and whether they should be subject to PAYG withholding, and whether superannuation guarantees can be made on that. So basically they're saying the consequences of entering into a scheme for the sole or dominant purpose of obtaining or increasing the amount of cash flow boost is considered anti-avoidance, which has some penalties. So, they're going to look at, based on this guidance, they're going to look at your pattern of behaviour. If you haven't paid wages for 6 months, for example, or even maybe call it 18 months, the 2019 financial year, and 6 months into the 2020 year we're in now, and all of a sudden you pay wages to yourself in the March quarter to get, let's say, $10,000 minimum, and then another $10,000 in June, I would suggest if you've in fact paid wages, that is perfectly fine, but you are going to probably have to prove that it is in fact wages, and that was your intention, and you've in fact paid it. And it's even better if it's gone through your payroll. If it's gone through your payroll through STP, I do not think you have a problem. If all of a sudden it started in the March month, or it started in, let's say, February and continued into March. But if all of a sudden you put on your BAS that you have paid wages in the March month or quarter, depending on your lodgement period, but it hasn't gone through single touch payroll, I would suggest you have a question to answer, because single touch payroll is, you're sending the tax office every single pay period, whether that's weekly, fortnightly or monthly, your payroll data. And if all of a sudden you don't have any payroll data, but you're reporting on BAS to get $10,000, I would suggest you may have a question to answer. So that's my word of caution. And obviously, with our tax agent license potentially at risk, we're taking the careful approach, because they are looking at people's pattern of behaviour. And like I said, some trusts, for example, where you operate as a trust, if all you've done is take trust distributions and all of a sudden you have a wage in the March quarter to yourself as the trust owner, you potentially have a problem, again, unless you can show that it went through single touch payroll and you in fact pay the wage. So, this is a general, perhaps something to consider if you're trying to increase your entitlement to the employer boost as we move through this, because they are I've had 3 warnings as a tax agent, and every tax agent would have received these warnings. So you just need to be careful. And
not specific as in we've received information about what they're going to be doing. Mick hasn't personally been warned.
No.
But weren't they clever getting single touch payroll in before coronavirus?
Well, it's been in for, this would be the 2nd year for large employers, 1st year for small employers. So it's been around a while, and coincidentally it works wonders for them.
It does. It's going to really work for them in this case.
Yeah, so we caution you against backdating or creating salary arrangements as far as January 1 in order to generate increasing entitlements to the boost and JobKeeper. Potentially JobKeeper may work for you if you start paying wages. I'm not suggesting, you had an intention for, it might start in April, because there are legitimate reasons why you might start paying yourself from, let's say, April onwards if you want to register for JobKeeper, because a couple of our clients, for example, may have made employees stood down. Therefore, they're not there working the hours, so someone still has to do the work. So the employers might now pay themselves a wage because they've stood someone down. So it makes perfect sense from their circumstances, situation, that they would pay themselves and therefore potentially could get the JobKeeper reimbursement from the government. So as always, you really need to look at your own personal situation and whether it is in fact an arrangement to try and access some benefits or it's legitimate.
Of course, if anybody's not sure, because it is confusing, and I don't think anybody wants to be getting that call, they check with their accountant.
Yep.
Although, check with your accountant at the Hendry Group. We have heard of some accountants that, they maybe they're not as up to date, but potentially going to get some clients into trouble. So just get good advice around. If you think you're on the borderline, get some good advice.
I have spoken to someone that did intend and has email proof and has, even set them up on payroll, but potentially didn't pay the wages. The intention was there. It was just never done. So you could potentially show that, you never got round to it for a reason or another. Maybe coronavirus came around. But I would suggest that everybody's situation and set of circumstances are very unique. And it's not just, I can backdate wages and I'm going to get, $10,000 or $20,000 over the next few months and be entitled to that, because it definitely is a situation of pay now, ask questions later, because of the sheer volume of payments that will come out of the tax office and the sheer amount of JobKeeper payments that will be through the system. Once the coronavirus pandemic has passed, I think there'll be some questions asked. So so you don't fall foul of these, warnings, I would suggest, you don't try and manipulate things too much. But again, ask us the question. Ask us the question as your advisor, because in some situations it may be appropriate, and in others may not be appropriate.
Okay, now Mick, I want to go and get my pizza in 5 minutes.
Wow.
So
we've got 7 minutes.
Have we got anything? Have we got? Let's move on.
Okay, so a question: if your quarterly BAS and monthly PAYG withholding, is the second tranche automatic after the March qualifying? Yes. If you haven't used your $50,000 in the, I'm assuming you're talking about the economic boost here. If you haven't used your $50,000 maximum in the March month, because you are a monthly lodger for PAYG, then whatever's carried over can be used in April, May, or June, right? So you've got 4 months to essentially use your $50,000. For quarterly lodgers, they've got 6 months, because they've got the January to March period, and then they've got the April to June period to qualify for that $50,000. So I think, there is some scope there, and that's how you qualify for up to $50,000. But the JobKeeper one is the most topical one due to the sheer the complexity of it and the 30% measurement in revenue. So I think, people need to look at that.
Excellent. All right, so I think you've done a pretty good job of updating, and obviously we'll have more information as it comes through. Call if you've got any queries. something that I just want to mention before we do jump off is that Mick and I are incredibly passionate about using our training, our skills, our tools to help business owners through this particular period. We want to be valuable. We want to, that's something that we can actually do during a crisis where otherwise we'd be feeling, fairly helpless. So,
like the bushfires, where we're not firefighters.
Yeah, we're not firefighters, but we're business warriors. So one of the things that we're looking to potentially set up and an initiative that we thought we might do is a business hub. And what we thought we'd do with that business hub was for anyone who registers, it's free. We're not charging anything for it, but we'll do weekly webinars, and it won't just be on the stimulus package. It'll be on other things that we believe you need to be doing right now during a crisis like this.
Yeah. So on that, sorry, Karen, I think now we're going to move into maybe potentially the 30% revenue, but each week I'm going to move into what can you actually do to survive.
Yeah, that's right.
Bank loans, how to grow your business, which you're passionate about.
Yeah.
What you can do to retain your clients, sell, continue your business even though you might be working from home. How to keep it going for when the world gets back to normal. So, we're going to move from stimulus packages to help you grow your business on these weekly webinars.
Yeah. So we're going to set up the Hendry Group Business Hub. As long as we get enough people that say that they're interested, what we'll do is we'll send out an email in the next day or so. And if you can just let us know whether that would be something that you're interested in, and you can register. And if we get enough people register, we'll certainly do that. We'll have an exclusive Facebook page as well, so you can access us for questions in between as well. So hopefully that sounds like a good idea. If it's not, I guess we'll soon find out. But we'd love to be able to just give some support at a time when it's most needed.
And we'll touch on commercial rents, but no, I don't own hand sanitizer. What's that? I don't know what that is. Why would I use hand sanitizer?
It's a liar. I've been preparing for Armageddon my entire adult life. We've got plenty of sanitizer.
Yeah, we're going to discuss a whole bunch of issues. How to get the lending, what lending you should ask for. I think that's now the next topic as the banks are getting ready. What funding should you ask for depending on your situation, but we'll give you some general overview. We'll look at commercial rents, what you should do to preserve cash. I think that's going to be vital as we move forward. It's one thing to get a boost from, payroll tax, refunds, to get, the economic boost for employers, and then to get JobKeeper. But now we're going to move into how do we survive? How do we get cash flow? How do we grow? How do we market? How do we keep clients? How do we really move forward?
Yeah. All right. Well, I think that I'm pretty happy with that idea. Hopefully you guys are as well. We'd love to be able to be supportive and valuable during this time. But we are going to jump off now because I do want some pizza for dinner, and I know that you probably have things to do as well. So we really hope this was valuable and look forward to seeing you again. All right, Shane, we can have our pizza in isolation. All right. See you later.
Bye, guys.